Welcome to the Capital Compass. I'm Lindsay Melchuk. Almonty Industries, Inc. is building real assets, producing critical minerals, and slashing Western dependency on China. Meanwhile, MP Materials basks in inflated multiples boosted by Washington headlines and investor complacency. Now, this isn't just a valuation gap, it's a market failure. Back with us today is Matthias Greiffenberger, our trusted capital markets analyst at GBC AG, who just dropped a report that calls this out in no uncertain terms. If you're still pricing potential over performance, buckle up. Matthias, so great to have you back. Welcome, welcome.
Thank you, Lindsay. It's great to be back.
Now, Matthias, Almonty's got production. They've got that geopolitical leverage and tungsten dominance. MP's got branding and beltway buzz. So why is the market handing MP a $1 billion valuation while Almonty gets priced still like a junior?
Well, I think it basically boils down to perception versus fundamentals. MP Materials is playing the capital markets game very well. They have a high-profile New York Stock Exchange listing for years, a polished PR machine, strong political visibility in Washington, and that gives them a great branding, and that gives them also a valuation premium. And in contrast, Almonty has stayed laser focused on execution. They've been building what will be soon one of the largest tungsten mines outside of China, and they are fully permitted, government-backed, and already contracted with US defense. So I think it's basically what I just said, is a big gap between perception and fundamentals. They just listed on NASDAQ, but the markets still haven't caught up to the story. The fundamentals are already there. It's not a risky junior anymore, but it's being priced like one.
Well, tungsten's one of the hardest supply chains to break into, and Almonty broke in. As you said, Korea's Sangdong mine isn't just a story, it's a strategic asset that they're building. Now, why aren't investors treating it like one then?
Yeah, that's the disconnect. The Sangdong isn't just a project, it's a geopolitical lever. Fully permitted, financed by governments with 15-year offtake agreements with the US defense contractor. This tungsten is destined for critical defense uses like drones, missiles, and high-tech electronics. It's one of the few large-scale tungsten sources outside of China, and the US is well aware of it. But because Sangdong hasn't hit first production yet, the market still treats it like a theoretical. So once that flips, it should be viewed for what it is, a Western cornerstone asset in a weaponized global supply chain.
Well, your report laid it bare. Almonty is executing while MP is still mostly marketing. What specific financials or milestones prove Almonty is massively still mispriced?
Yeah, there's a clear difference between hype and hard data. And Almonty's numbers are starting to speak louder and clearer. The construction at Sangdong's mine is nearly complete. Long-term offtake contracts at floor pricing are already signed for Sangdong. Financially, they are, in my opinion, on track to generate triple-digit millions in EBITDA within the next few years. And meanwhile, MP trades at a massive multiple on much slower expected growth. So in my view, Almonty offers more upside and stronger margin leverage, yet it's valued significantly lower.
Well, you've mentioned it a little bit. You've got Almonty trading at a fraction of MP despite operating margins, supply contracts, and even that national level backing. Is this about ignorance, or is Wall Street actually just being lazy when it comes to small caps?
Honestly, it's probably a bit both.
Yeah.
There are still blind spots when it comes to small caps, especially when they were listed in Canada or Germany. So institutions tend to stick with the brands they know, even when the fundamentals are say otherwise. But that dynamics is shifting fast. Almonty is now listed on NASDAQ, and the strategic narrative is impossible to ignore. So once these institutions look past the name recognition, the discount should vanish.
Well, we all know that every mispricing does have that breaking point. Matthias, what's going to force this re-rate? And when it happens, How violent do you think it could be that the snack back happens for anyone that's not already in?
I think the trigger is pretty obvious. It's the first production at Sangdong. So that's when the narrative flips. Almonty will be, in my opinion, become a cash generating, strategically critical Western supplier and market staff for non-Chinese tungsten.
Yeah.
And the fundamentals are real. The supply chain is secure and the contracts are signed. So now it's all that is left that the market catch up. And once they catch up, they will catch up quickly.
Well, thank you so much, Matthias, for joining us. This has been quite insightful, and it's quite the journey that Almonty has been on, and I'm so excited to be following along with that story. So come back soon and let's do more conversations.
Thank you so much, Lindsay. And as always, regarding the conflicts of interest, please check out www.gbc-ag.de.
That's right. And here is our disclaimer. These conversations are packed full of sharp insights to guide your investment decisions, but remember, they are our own opinions. Our guests may have skin in the game, and so do we. Do your own due diligence, know your risk tolerance, and speak with your financial advisor. For the full legal disclaimer, head to the link in the article below. Again, that was Matthias Greiffenberger, analyst at GBC AG, cutting through the noise and calling out one of the most absurd valuation disconnects in the market right now between Almonty Industries and MP Materials Corp. For the full GBC report, head to their English site, gbc-ag.de/en. I'm Lindsay Melchek. Thank you again for watching. We'll see you soon.